Welcome back to Trading Hour. I'm intruding because we have an important bank joining us whose results we will be discussing. Indian Bank is the company in question. A very good set of numbers if you looked at the way in which the asset quality has panned out, the way in which the margins have been held on at 3.5%, in fact improved by 4 basis points. It's definitely a good set of numbers. Joining me now is Mr. Binod Kumar, the Managing Director and CEO of the bank. Mr. Kumar, good morning and thank you very much indeed for joining us. Your results make it difficult for a journalist to ask a difficult question, but I have spotted one, and that is your deposit growth. That's the only thing that has disappointed. The year-on-year growth is only 7.4%. Can you explain, is it just a temporary phase? Will it get better now with the Reserve Bank introducing liquidity steps?
Thank you, Lata. Thank you for hosting me. Lata, if you see my number, actually you have bang on the number. Deposit growth is little bit slow. It is around 7.31%, whereas we have given guidance of 8%. But in the quarter, we have been able to raise infrastructure bond at a very good rate of 7.24% and 7.12%. So our cost of fund requirement has been met. And that's why we didn't wait for raising any costly deposit. That's why, and it was part of a strategy that we will not go for very costly deposit, and we are mindful of the cost of the fund also.
Oh, that makes perfect sense, and that's a good strategy as well to maintain your margins while raising money from sources other than deposits. The other thing that I'm not very clear about, your asset quality is overall very good. But did you notice any pain in your retail segment, especially in your unsecured loans? If you can tell us what is the percentage of unsecured loans and whether there was any pain at all there.
No, Lata, our unsecured book is very less. It is less than 1.5%. Total, it is in absolute number, it is 9,700 crore. Out of that, around 6,000 is from salaried and pension fund pensioners. So we are not seeing any stress in that.
Okay. Those were the two things that I wanted out of the way. Now let me come to what your strategy may be in the quarter going forward. Will you continue to persist with raising long-term funds, either CD or infrastructure, or will you now start going for deposits?
So my strategy will be a mix of both. I will go for raising some long-term deposit also, and focus will also be on the CASA. We have a plan for also raising some infrastructure bond in the ensuing quarter, around 5,000 crore we are planning. Simultaneously, I will also focus on the increasing our CASA, which we have been able to maintain this far, and my endeavor will be to maintain that share.
Okay, yeah, you've got about 38.5% of current and savings account, which is a good number. And you've almost maintained that. You're around that ballpark quarter on quarter. What about the margins itself? Therefore, can you maintain at 3.45?
Margin in this quarter, we have been able to maintain at 3.45 and have given a guidance between 3.40 to 3.50. That has been driven by, if you see, my yield on advances has gone up by 15 basis points, whereas cost of fund has gone up by only 5 basis points. So, and going forward, if there is no rate cut, margin will also depend on the rate cut. If there is rate cut, there may be some moderation, but there is no rate cut. Our endeavor will be to maintain this margin, but definitely it will be within our guidance of 3.40 to 3.50.
Okay, got that. That is averaging 3.45 only. What about cost of funds? Any guidance? Will it remain where it was in the third quarter?
Yes, we will be able to maintain cost of fund because we will be very mindful of raising costlier deposit, and as we have also planned of raising around 5,000 of infrastructure bond, around 2,000 of tier 2 bond we may also raise during the quarter. So 7,000 approximately, that will also be cost of fund, which can be deployed in case of need for the loan.
Okay. You have an excellent ROE. So would you care to raise equity capital at all? I mean, tier 1?
As of now, we don't need actually. If you see, my tier 1 is a healthy Even capital position is 15.92%. And if I profit, which is not plot back so far, 7,962. And including March profit, I will have enough liquidity. So there is no need as such for raising any dilution of equity or going for QIP or other mode. But yes, if market conditions are conducive, then we may think of, but there is no plan as such now.
Okay. Well, now a couple of hypothetical questions, because I don't know whether the Reserve Bank is going to push for ECL, that is expected credit loss accounting, anytime soon, considering that markets are going through some kind of a churn. What is your, if they were to introduce the new liquidity rules and separately the new ECL rules, what may be the impact on your numbers? First, if you can tell us about LCR.
LCR, we have healthy LCR. On an average, we are maintaining 125%. And the impact of LCR norm, which is proposed, is around 8 to 10 basis points. So even if LCR norms come, we will be able to maintain healthy LCR coverage of around 110 to 115 basis points. Coming to ECL, ECL is a guidelines is only draft guidelines, and let us wait for that, because many calculations are involved there, because ECL is a function of PD and LGD. If PD, we have to see how many years the regulator is prescribing. Similarly, LGD, what they are proposing. So talking about the impact of ECL will not be right now.
I agree. And it is anyway in a state of indecision as to when and whether it will be introduced. I guess it will have to be introduced at some point in time. Very quickly, loan growth. You've done very well quarter on quarter. Advances have grown by about 5% almost. Are you seeing any capex revival? What is your guidance on loan growth?
Loan growth, if you see, we have grown by 10%. Out of that, majorly it has been contributed by the RAM sector.
Okay.
So our guidance is, we are continuing with our guidance between 11 to 13%, and primarily our focus will be on RAM sector, and within RAM, my focus will be on MSME. Having said that, capex, I mean, there are some green shoots, but it is not as we have expected earlier. Let us wait and watch.
Okay. Just one number. What is the credit deposit ratio at the moment?
79.63%.
Okay. Then you're comfortably off. You can, for some time, lay more emphasis on credit than advances. Thank you very much, Mr. Binod Kumar. It was a pleasure speaking with you, and all the very best for 2025.
Thank you, Lata.
Okay, well, that's the set of numbers. Actually, that's a very important revelation he made, that the deposit growth looks small, but they've raised money through infrastructure bonds. And that explains why they've been able to maintain the margin despite not raising deposit.
Thank you very much for that. From Indian Bank, we'll move to another corporate, and that's TeamLease. Ramni Datti, the CFO of the company, will join in to discuss the Q3 numbers on the other side of this break.